This is week 19 of investing every week in the stock market. I started this series to document my journey in the stock market and in the hopes someone might get interested to start investing or stay consistent with their investing journey. If you're interested, do not forget to smash the like button and subscribe. Every subscriber matters and helps get this video to the right people. This week we have around $529 to invest, plus some leftover money in my other accounts through dividends that I received in the last month for a grand total of around $550. My first buy, as always, is going to be in the S&P 500. This is an index that tracks the 500 biggest companies in the United States of America. I like this ETF, VFV, that is a Vanguard product, but there's many other ETF providers out there that give you access to the S&P 500. You can see the yearly performance is still solid at around 19.6%, but the last month has not been very beneficial, down 4.39%. You have to look at the long-term average though. If you look at the 5-year chart, it is up nearly 100%. The long-term average of the S&P 500 is 10% per year for the last 40 years, and I think for younger investors like myself, if you're in your 30s, 40s, even mid 40s and 50s, I think the S&P 500 is a good bet for at least a percentage of your portfolio. 10% per year for the long run. What more can I ask for? It holds solid American companies in the tech sector, the finance sector, healthcare, consumer goods, literally any industry that you can think of. So you're extremely diversified when you invest in the S&P 500 and you have solid growth as well. It's a win-win situation, and for that reason, I'm going to buy one share of the S&P 500, to the order, and done. My next buy is going to be in the NASDAQ 100 through this ETF HXQ. That is a global X product. Once again, similarly to the S&P 500, there's many other ETF providers out there that give you access to the NASDAQ 100. The NASDAQ 100 holds 100 of the biggest companies in the United States of America. Technology, financials, banking, healthcare. I can go on and on about what industries are included in the NASDAQ 100. One thing to note with this ETF and this index in particular is that it's very technologically focused. Since tech companies have returned the most value in the last decade, it just makes sense logically that they compose the majority of the NASDAQ 100 index. If you think tech is not the future, you might want to stay away from the NASDAQ 100, but personally, I believe that technology has tremendous value to provide for any forward-looking industry. If you look at AI, automation, robotics, data and analysis, anything that you can think of that is forward-leaning and will make humankind's experience better has technology embedded in it. So that is why I choose to invest in the NASDAQ 100. The 1-year chart is good at 18%, 5-year is absolutely nutty at around 155%. I'm not saying that this is going to be the case moving on, but I do think that technology is going to be a tremendous generator of return, and for that reason, I'm going to buy one share of the NASDAQ 100, queue the order, and done. My next buy is going to be in a leverage S&P 500 ETF through this ETF USSL. We've covered the S&P 500 before. What does leverage mean? Leverage is just a tool to add on to your returns. For example, if the S&P 500 goes up by 10%, this ETF USSL that is 25% leverage is going to go up by 12.5%. The opposite is also true though. If the S&P 500 goes down by 10%, this ETF is going to go down by 12.5%. You can see the pros and cons here, but for a long-term investor like myself that does believe in the S&P 500's potential, that is the more important part. If you do believe in the underlying holdings potential, which I do, you might want to add slight modest leverage to your holdings. 25% is not crazy like 2x or 3x, but it's still enough to keep those returns good and keep magnifying those returns in the long run. So I'm going to buy one share of USSL, queue the order, and done. My next buy is going to be in a leveraged NASDAQ 100 ETF through this ETF QQQL. Once again, a global X product, once again 25% leverage. The underlying thesis remains the same for the S&P 500 leverage ETF. I think the NASDAQ 100 is going to have positive returns in the future. Apple, Nvidia, Microsoft, Google, Tesla, any tech company that is going to be anything in the future is included in the NASDAQ 100. And I think 25% leverage is just going to magnify the returns 10, 20, 30 years down the line. This is a completely growth-focused play. I don't get any dividends from these ETFs. Most of the returns is going to be in the growth itself. If you believe in technology, if you believe in the NASDAQ 100, if you believe in the US economy, this might be a good option for you. If you don't believe in at least one of those, you might want to look away. But for me, I think it just makes sense to invest in the best companies with the most data and the most amount of monopolies, sadly. So I'm going to buy one share of QQQL, queue the order, and done. My next buy is going to be in Fortinet, ticker symbol FTNT. This is a cybersecurity company operating out of the United States of America. Fortinet has a whole suite of products to protect you from attackers. Firewalls, threat detection services, network protection services. They have literally an end-to-end suite of cybersecurity products. In the last year, Fortinet has done extremely well, and has returned 46%, but I think it has tremendous room to run even for the future. The cybersecurity market is expected to grow exponentially in the coming decades as cyber attacks get more complex, threat attackers get more complex, and I think companies like Fortinet specifically are going to see their dividends. They have a solid growth rate at around 15% per year. Also, a very high profit margin, which is not typical for growing tech companies. Their profit margin is in the 30-ish percentage. High growth rate, high profit margin, cybersecurity market growth rate. It just combines into a very, very good buying opportunity. And for that reason, I'm going to buy one share of Fortinet, queue the order, and done. My next buy is going to be in a leverage all equity ETF through this ETF HEQL. All equity essentially means that this ETF holds not just the US and Canadian markets, it also holds international markets. Something you might notice with my portfolio is that I love North America, and rightfully so. The US market in particular has generated the most amount of return of any market in the last decade, and I think given the companies and the exposure that it has, the international dominance that it has, it is going to be the same for the next 20-30 years, which is why I primarily choose to invest in the US market. I think international markets do have some room for growth though. Specifically, developing markets in Asia, Africa, and South America have tremendous growth opportunities if they can get some underlying issues solved out. This ETF is also 25% leverage, which means that whatever the returns the underlying holdings generate, I'm going to get 25% added onto that. A long-term hold, a growth-focused hold, and believing in the world's stock markets. I'm gonna buy one share of HEQL, queue the order, and done. My next buy is going to be in the Canadian market through this ETF VDY, once again a Vanguard product tracking the FTSE high dividend yield paying stocks, or in broader terms the TSX, the Canadian version of the S&P 500. Canada has lagged the US in terms of growth in the last year. As you can see, this ETF is only up 13% compared to 19% of the S&P 500, but I think Canada has tremendous growth opportunities in the future, primarily because of the natural resources that it has. It has tremendous amounts of lumber, tremendous amounts of gas, and other resources that have not even been discovered since half of Canada is under ice, literally. And I think that it has good potential to harvest those resources and generate stock market value from it, or I should say generally economic growth from it. Also, it has the opportunity to make its workforce even younger through immigration and other means. I just think it makes sense to invest in the Canadian economy. One other underlying factor is that most of these industries are oligopolies, and oligopolies tend to generate or extract more value from the consumer as time goes on. So I just want to invest in some oligopolies. I want to be one of those people that are rich and extremely well off in those movies that invest in oligopolies and have mansions. I don't have a mansion, but maybe VDY will make sure that I have a mansion later on in life. So I'm going to buy one share of VDY, queue the order, and done. My next buy is going to be in HYLD. This is a Hamilton ETFs product tracking the S&P 500 pretty much. That is a covered call ETF. Covered call ETFs are extremely controversial in investment circles online. There's people fighting each other both ways and trying to really punch each other till they're down, picking one side or the other. But I think covered call ETFs are a good way to keep motivated to invest. They sacrifice some long-term potential growth to give you income now by writing an option strategy on your portfolio called covered calls. Depending on the option strategy, they might sacrifice the entirety of the long-term growth or a percentage of it. This ETF HYLD does not write call options on the entire portfolio, meaning that I do get some long-term potential growth and I do get income now. For example, the S&P 500 has a yield of around 1%, HYLD has a yield of around 12.5%. You can see that 12 times yield might be a good motivating factor for some people to keep interested in investing. I see my monthly income go up. Now I get paid around $100 every single month from HYLD. I can't say the same for the S&P 500 ETF that I have, although most of my money is in the S&P 500 for long-term growth. I think for an investor like myself that is extremely motivated by income, covered call ETFs might provide that opportunity to balance income and growth. And for that reason, I'm going to buy one share of HYLD, queue the order, and done. I'm all out of money, which means that is it for this week's video. Please do not forget to smash the like button and the subscribe button. Every subscriber matters and helps get this video to the right people, also interested in money, investing, saving, and just building wealth. I'll see you next week.